What's up, you guys? This is Junior Trader, and in this video, we are taking a look at options analysis for Tesla stocks. So I'll be using Yahoo Finance for that, and I'll be putting together a confluence with just watching the sentiment, how the options on Tesla are trading for the next week, that is April 5th expiration, and we'll put a thesis together as of what type of options would work out and what may go worthless, and we'll talk about the sentiment all in all. Right now, I did a technical analysis already on Tesla stock, so check this video out on my channel, this one, right over here. Let me zoom in for you guys. Tesla stock 200 or 140 next week, because after seeing this video, this options analysis would make a lot of sense as well, because we will be putting options together on the chart analysis. And if you have seen that video already, things will make much more sense to you why certain things I'm talking about in certain way. Okay, so let's go back to the options here. And I just want to let you know that none of this is any financial advice. This is only for education purposes. I'm only providing my opinion, nothing more than that. I take guarantee of nothing. You are responsible for your own stuff. Okay. Now, options. So options shouldn't be taken, guys, as, oh, this is where the options weight is. This is where the interest is, mostly, lying on the put side or the call side. Then, oh, the stock price will go in that direction. Well, no. Options shouldn't be taken in the thinking process of such type, because options only tells you where the interest of the options buyers are. It doesn't add any like the share volume in itself. It just tells you the options interest. So it doesn't say, oh, options, let's say if we have a lot more calls option, then, oh, the price is going to go up because there are a lot of call option. No, it just tells you that that's where people are betting. Okay, it's just take it as a casino. Right, it's not a very accurate analogy, but it has a lot of overlapping principles. So just take casino as an example. If you're playing on a roulette table or a blackjack or whatever, let's take an example of a roulette table. And if the chips are put on one number, or on one of the strike price, right? That's the way to call it, right? It doesn't mean that that strike price is going to win just because, or let's say if there are more options bought in the direction of anything below 30 price, right? That doesn't mean the ball is going to land on everything below 30. It's just that people are betting in that direction. Okay, so take options just as just seeing, okay, where are the people betting the most, what is the sentiment in the market. It doesn't really do anything with the what the price is going to do. And that's where we, at least in my videos, what I like to do is put the technicals confluence together with the seeing where the sentiment is, and if technicals are going to favor that sentiment of the bulls or the bears. And that will help us know, okay, what options are worthless, and what options may make money, right? So it's all about that. Okay, so just wanted to get that understanding clear across the board. Now, as I said, nothing is financial advice in this video. I'm only providing my opinion. Yeah, that's all. Okay, so Tesla, and I have a straddle here. Well, straddle viewing option here, and we are on the April 5th of expiration option. So current price where it is, Tesla is at 175 and 79 cents, and so this puts us right over here. Now, on the left side we have calls, and on the right side we have puts. Now, something that I want to bring your attention to is the weight on the put side. The rightmost column in the put side is the open interest, and I am seeing a lot of bets being placed on the put side on Tesla, unfortunately. So I'm seeing 44,371 open interest, 23, 30, right? Compared that to calls, 17, 14,000, 16. So you get the discrepancy here, right? There's just so much weight on the put side of the open interest. So look at it, 44,000. So yes, People are betting on the downside on Tesla. That's the sentiment. That doesn't mean price is going to go there. It's just the sentiment. For the technical analysis, you need to check out my video, as I just said, here on my channel here. I would say technicals are the most important thing, even more than the options. Okay, well, options are just the betting game, as I'm saying, right? Technicals take the precedence over anything else. And also, please note that Tesla will be coming out with their numbers of the quarterly, production and deliveries numbers. So that will also has to do something with influencing the price there. Okay, and again, technicals is where everything starts with the technicals, because regardless of if those levels hold or break, right, as we have talked about in my other video, the technicals will eventually shift, and regardless of what the news is, the trade will become according to the technicals. And that's why I love the beauty of technicals, right? That's why I trade with the technical analysis. Okay, so sorry. Now let's go. Okay, so I showed you that puts, there are a lot of sentiment, right? Like high volume is going to work puts. Open interest is more on the put side, especially this $172.50. Let's talk about this particular put, because this is where the most open interest is. Can someone make money into this now, where it's the going for 3.75, which means $375 is the risk on this, because one contract is traded as 100 shares, right? So $375 is the risk on this. To make money on this, it has to hit at least 168 and some cents. So let's put it for simple calculation with the fees and everything, $168. Someone needs to, it's only profitable now, 172.50 if it goes to 168. Can Tesla stock go to $168 by the end of next week? So let's go to the hourly interval. Let's see what is standing in our way. And as I said, check out my technical analysis video. That will give you a lot more background as well. So 168 is right around here, this zone. Now, for that, Tesla needs to get below this 200 hours moving average. There is that one thing standing. Yes, the structure on the intraday is looking weak, and it has broken to the downside intraday, right? And there's a possibility that Tesla can continue intraday or 2 days lower. The only thing standing between 168 or puts making money on that, $168, which has a strike price of 172. With the added down payment, this is where only you will break even 168 and lower. Guys, the thing is that 200 hours moving average is sitting right there. This option is only worth trading, in my opinion, if it breaks 168. Sorry, if it breaks 200 hours moving average. If bulls hold this line and this thing comes down and goes back above 175 and 25 cents or so, and also 177, if Tesla price gets above 177 and 48 cents, 168 is going to go worthless, which means this option where the most open interest is sitting right now out of the money on the put side, 172 and 50 cents, this is going to go worthless. So yeah, this is only worthwhile trading. And look, if it's only worthwhile trading if it breaks that 200 hours moving average. And you will have to see though what the premium prices or how much the option is going for then, right? So, but yeah, right now I don't think it's worth it. Anything above, like, this is the thing, right? Like 172 and 61 cents. If this level breaks, this is where it's making the options complicated, because 200 hours moving average is sitting right over there. But yes, there's possibility, just because the structure is looking weak, but it's not a confirmed break yet. So, okay, so this one is right now questionable in my opinion. But yeah, it's possible but questionable. So I would give it maybe 60 to 60. Well, sorry, I'll give it 50% to maybe 55 or 60% likelihood happening, but I would more like to see something where 80% of likelihood is going to happen, because you're putting your down payment. You remember, if you buy this option for the price you're putting down, and it expires worthless and you end up holding it, your money is gone, right? And every time if it goes against your whatever and you are still holding it, but it's still, under expiration, hasn't expired yet, and you try to sell it, you can recoup some of the money, but not all the money. So you're still having loss there, okay? So be careful with this put option, even if it's showing a lot of interest. Technicals are not fully confirming that direction yet. Okay, now 165 also we have a lot of interest. 170 as well, for which again it's 168, something you have to be profitable on. Now 165, again, it's like 100, and let's talk about it because it's also having a lot of open interest. So that will be 100 and almost $63 you need to be profitable, right? So $163 will be down here. Oh, wow. Huh. And you have to make money below that, right? 163 and below that where we are in the support box. I would not, at least not right now, because we have a supports formed here throughout the journey. I would not do this right now. The 163, I'll let it go. Yeah, this is, I think it's not, just my opinion. I don't think this would make any sense, this particular strike price, 165. And anything, yeah, below that, I would not want to do it. 160, you have to be like 159. Is that a possibility on Tesla? Like all these options to the downside are only worth trading, in my opinion, to put it simply, if it breaks below this 200 hours moving average, okay? That's what I would suffice it at right now. It all depends on this, especially on Monday. If this loses 200 hours moving average, yes, those put options might start to make sense, but look somewhere closer to just 170 below. Not, yes, I mean you can still, but okay, the 200 hours moving average needs to break before any of these put options becomes viable. And yes, in some chance with a lower premium, maybe 160 would also make sense, but it all depends what happens on Monday. If it loses 200 hours moving average, if it holds that support and breaks above 178, forget all these options. Okay, if Tesla breaks above 178, forget all those options, not happening. And if by Tuesday or Wednesday Tesla is not still breaking below 200 hours moving average, yeah, all the put options, even lower currently 168, and all of those are going to go worthless. Right now, 200 hours moving average is sitting in front of all these put options, in my opinion, to put it simply. So yeah, there is a chance, like maybe 60%, but not confirmed chance. So okay, now on the call side. So I'm trying to see if there's an option that has much more benefit to trade here. On the put side right now, I'm not seeing that. So let's take a look at calls. So as I said, like the calls interest is not there right now. Okay, you can see such a less open interest on the calls compared to the puts. So let's take a look at out of the money. If 185 is worth it because it's going for almost just $2. So 187. Let's talk about this one first. Yeah, let's talk about 185 one first. So 187 to make money. Right up here. Well, for this 187, what Tesla needs to do, almost this zone, right? Tesla do have to change the structure first. This will become only worth it to trade 187 if Tesla gets above this 177 and 61 cents or back above 180 by Monday and Tuesday. If it does that by Friday, possibly, yes, that 188 or 87 might make sense. So the question you have to ask yourself, is this worth the risk of $2, which means $200, compared to risking $400 or $500 to the downside, which hasn't confirmed yet? And even so, Tesla right now is at a place, and if you have seen my technical video, Tesla is at a place where it's 50-50. Monday will decide for Tesla which direction it's gonna pick. And if you really want me to cover these options analysis as well on day-to-day basis for Tesla, guys, hit the likes on this video because I cover technical analysis daily. And if you want me to do options analysis as well, I'll do that. So, but yeah, I need likes on this so that I know that you want me to do that. So, okay, now, okay, so 185, we talked about it. I want to talk about 109 as well. Well, 187 and 50 cents is going to be very close to pretty much, risking same amount of money. 190 is going to make you risk $100, and this is $69, 192. Can this happen? 192 or $191 range to make money, and above that is only when you'll make money, right? That's a possibility as well, but as I said, it has to get above this $180 range by Monday or Tuesday. If it does that, sure. Otherwise, no. So you get my point, right? Right now, the options on the outer side on calls is only profitable, which is like around 190 or so, or 100, like end tail of 180, which is 186 or above, is if only Tesla gets above $180 or breaks the structure above 177.63 cents. So you get my point. It's right in the middle right now. We have to break some structures on either direction to confirm these options. Let's see any closer one if it's worth it. So call 177.50 cents is going for $4.50, which means 181. This, again, so this option, in my opinion, can be, again, yeah, structure break needs to happen 177.50 cents. Oh, Tesla, yeah, this option is right now complicated. It's not making money on either side. You have to wait for the confirmation. That's what I'm trying to get to. 175 puts, again, it has to be 171, right, to make money on that one. 175 put. 170, yeah. 200 hours moving average today. All right, guys, so here's the thing. So Monday will decide what's the best option is. And again, that's why we do this analysis with the technicals, because today you can see on Tesla for this week, right now, it's anyone's game. And that's why I'm suggesting watch this technical video, because you will learn a lot about why right now it's 50-50 Tesla, right? Because Tesla has broken some intraday structure to the downside. It has broken the channel, but it is not fully bearish as well, because it's holding some support zone of 175 and also 200 hours moving average combined together with this blue box of support at 172. And also it hasn't lost that pivot that it has formed on the daily for the uptrend, right? This is the pivots that it has formed, higher highs, higher lows. So you get my point. Tesla is showing some signs of bearishness on the intraday, but on the longer term, it's still sitting bullish, right, in the technicals. And that's why right now, it's better to wait for a full confirmation for either direction. Right now, it's tug of war. It's like bulls and the bears are 50-50 on it. So for all the bulls or any options, like bullish sentiment will start to regain momentum again if Tesla breaks up 177.52 cents or 57 cents, and most importantly above 180. So this is the zone for bulls to regain 177 and 180 before upside can be traded either through shares or options. And for bears, Tesla needs to lose this 200 hours moving average at 172 with some pivot points that will also be lost then at the daily interval, and then this blue box zone and 175. So this is the zone 175 to 172 that Tesla needs to lose before bears can gain control, and Tesla needs to regain 177 and above to 180 before bulls can gain the control again. So you get my point, right? Like this is the area that either direction needs to break right now on Tesla before any direction can benefit from either shares or options or any technical trading. And as I said, check out my technical video that I did on Tesla. That will give you a lot more understanding as well. So that's where I'll wrap up this options analysis, guys. And as you can see though, where people are betting more, and again, as I said, betting doesn't mean that's what is going to happen, but it just tells you the sentiment. Where people are more betting, that's on the put side, okay? And that's that for this video, guys. If you found it helpful, valuable, hit the like, subscribe, and with that, I'll see you in my next videos. Take care, bye.